payers, even those who don't trade gold, can also be able to be following up, and those trading gold, you can also try to be trading other pairs. Yeah, basing so that at least you can have like one or two pairs which you have mastered. Yeah, personal, I love gold because I've had bad days with gold, but when I compare the beautiful days I have had with gold, no matter how hard the bad days are, I can never give up. I'm what I am because of gold. I've lost money on gold, but I've made money on gold. So right now, there's nothing which can make me give up on gold. In the beginning of this year, I lost my account, which was worth 12,000 US dollars. Actually, it was that's nearly, some of you know it. I had parked it somewhere, and then after having placed a trade, before setting stop loss and take profit, then someone was getting out of the parking, so I had to first get out. I had to first move out of the place where I was so that I give space for him to leave. And then by the time I got back, I didn't know that I had not give attention to news, and but then I had found when the market had already moved. Yes, so that's now came, but then it took a few weeks for me to recover psychologically. But then when I got back in the market, started resumed moving. Yeah, you can testify that I've recovered more than what I lost that day. Yeah, so we are one on one with gold, like, and you see when it comes to gold, yeah, the moment you master its patterns, the way it moves, the way it behaves, you find that it will be a very simplistic pair to trade. There are some two strategies which I'm working on. I'll be sharing them on my YouTube channel. And on my YouTube channel, you make sure that you watch and follow them up so that you master those strategies. So the other thing is that when it comes to gold, now like you guys, Desmond and others, you know that you mastered market structure, price action. You know how to use the Fibonacci. You know how to analyze market structure. You know how to get price action confirmation. You know how to trade the chart patterns. What I can tell you is that you see, on the plenty of knowledge you have, you should have what you call factors of confluence, things that confirm you to take an entry. Personally, I trade with the things that confirm me to take an entry are I I how there's a market structure, then price action. On price action, I add on I add on price anatomy, like how the previous candle closed, how the candle closed. It communicates a lot. You're going to see that the candle is closing as an engulfing candle. Actually, I saw that thing on gold because I've been in the markets today. I saw that thing on now. Is it on H1? Yeah, it's here. Someone would call this as an engulfing candle. But for someone who mastered candlestick anatomy, price action means it's all about how the candles behave. How do they behave? Like when you see that how it's all about how candles react. When you see that a candle is closing with a full-bodied candle without any wick up, what does it communicate? Now seeing a candle like this, even if this would be an engulfing candle, but I cannot take a buy entry here because this is big rejection from the sellers. So you don't, while you trade your strategy, make sure that you don't undermine the price anatomy, like price reaction. How did the price react on the previous candle? Why this candle bought? Actually, this candle bought because it reached on a support zone. I bought, actually took a buy from here. It took on a support zone, then rejection started coming. With this rejection, it's the reason why this candle on M30 closed with this inside bar. Then the next candle fully had to buy. Because this was just a tight rejection, just a small rejection whereby this was inside bar candle. So this had to do, this had to buy because even H1 was having a big rejection from the buyers. So while you look for confirmations, don't ignore how previous how the previous candle, how price reacted on the previous candle. And make sure that you don't just be entering the market from A now. Now, like here, you're like here, let me buy, let me buy. No, target toward target on the in the beginning of the next hour, or when a certain candle is trying to close, follow it, close it while it's closing. Then when it closes and gives you a good price action confirmation, then you can do what? Then you can take that trade. The other thing, actually, the other trick why one of the other key things to trading gold, before I go to my factors of confidence, make sure that before you take a trade, first go on D1 and see how the previous day closed. Now this is how the previous day closed. This was Monday with the strong sellers. That's why today bought strongly. Today bought up to around here, but then rejection started coming in from sellers on a certain resistance. Which resistance is this? Yeah, there's a resistance on 3,352 to 3,355. So the market tried to buy, but then rejection came from sellers, and this was coming because of the way how the previous day closed. So sellers were strong, and actually even right now, still sellers are still stronger than the buyers. Right now, um, if today closes with an indecision candle, um, signaling a reversal, if today closes with an indecision candle and inside bar, it will be signaling a reversal for the market to reverse back to. There's a resistance for the market to reverse back to. Um, for the market to reverse back to the resistances above, looking forward to go towards 3,400. But if buyers fail to prove us that they close this day with a good confirmation, bullish price action confirmation on the one, then tomorrow will be what tomorrow still sellers will dominate tomorrow. Last week gold was so much into some kind of chopping. Personally, I stopped trading uh, on Wednesday last week. gold was having some kind of chopping market, and whereby um, it wasn't respecting certain swings. So when you happen to be in such a scenario, you see that you cannot define what is taking place. Just close your laptop, go do other things. Yeah, you trade only when you can be able to define what is going on the chart. Yeah. Now going back to the factors of conference, personally based on market structure, price action, candlestick anatomy, top-down analysis. Then on top-down analysis, there I add on there's a trader's algorithm which I use. Yeah, it also helps me so much. And then on that, the indicators I use the parabolic moving average not so much because I love using mostly the Ichimoku Kikuhayo. Actually, it relates like it also has some kind of relation to the moving average, but personally, I use mostly this one because it has several things which it can confirm me, and then on that I can add on the Fibonacci. Yeah, apart from that, there's nothing else which I use. Just make sure that you do daily market analysis. When you do daily market analysis, the other thing is that no matter how nice the market might seem buying, don't don't just buy. Try to first do some kind of top-down analysis. Look and see how the previous day candle closed. When you see how the previous day candle closed, oh, sorry, the network had got me out, but I'm back. I was still talking that always make sure that you first do top-down analysis. When you look at gold, gold is still in the buying trend, but it's having some kind of consolidation measured within this range. It's between 3,444 and 3,245. So gold is trading, is ranging within these zones. Goes here, comes here, goes down here, retraces, goes here, buys, comes back. So gold is trading within. Currently, actually, we are in the we are in a bullish trend, but we are in a medium kind of consolidation market on the one on gold. Right now, sellers are trying to keep pushing this market coming down towards this this support. That is 3,270. Actually, um, this week's market analysis is very simple. As long as gold is trading above 3,445, we are more bullish. But the moment gold closes below, actually, let me put this line here. Give it which color? Let me give it this. So this is a This line is the line which has to decide between buyers and sellers. As long as gold is trading above 3,345, as long as it's still above, keep looking for buying opportunities, because buyers are looking forward to push the market back to this resistance on the one, looking forward to go back to 3,400, going back to the next resistance. And when you try to do a wide analysis, you find that gold is looking forward to 3,500, or even 4,000 before the end of the year. So gold's major target is to be in, just like last year, when I believe everyone remembers that last year, we, according to our analysis, we believe we hoped for gold to hit 3,000 target before the end of the year, but it hit that target in January, in the beginning of the year. So this year, gold is targeting 3,500 to 4,000, meaning that, as per analysis, buyers are seemingly having a strong confirming side to keep buying compared to the sellers. So buyers, we hope for more buyers than the sellers as the year is moving. But currently, actually this week, as long as we're still trading above 3,000, 3,345, we are more bullish. The moment gold closes below, actually, if today closes below 3,345, then tomorrow will likely be more of sellers. So as long as we're still trading above 3,345, keep focusing on buying opportunities. The moment we close below, and the market trades around 3,400, below 3,345, we shall keep on focusing on selling opportunities. When it gets tomorrow and you find that the market is around, um, 3,000, 3,340, 3,330, keep focusing for selling opportunities, because sellers' target is to keep pushing this market beyond this level up to this point. Sellers major are targeting this point. Buyers are targeting going back to 3,000 for 3,400. So this is buyers' target. They're targeting to keep taking the market up towards 3,400, and then sellers' target is here. It's 3,270. Yeah, that's where sellers' target is. So this is like an equilibrium. While we keep trading above here, keep looking for buying opportunities. When tomorrow gets and we're below here, we shall be focusing on selling opportunities. So that's what D1 is telling us. Currently, you can see we are on H. This is H4. Still, the market is there's a lot of consolidation here. There's a lot of indecision. Buyers are likely to push this market up. So there is a lot of, it's a big battle here. Sellers are trying to break below, buyers are trying to keep pushing up. So that's how it is. They're also trading within our what? Within our area. When we get below here and the market sells and retracement back to 3,000, actually this is a support zone. It's at 3,342 to 3,345. But with these indecisions, buyers are likely to take over. We had, this was an indecision candle, then rejection, indecision, and even this current and even this current candle on H4 still, it's in some kind of indecision. So meaning that anytime buyers like to get off here and they keep buying. Now coming on H1, H1 we are having H1 we're having some kind of small, we have some kind of small selling trend. H1 we have a small selling trend, and then when you look on the buying side, we have buying side has this trend line support. So currently on D1, on H1, buyers are trying to actually. So the buying trend is like this. Let me make it more clearly. This is how the buying trend is, and then the selling trend is just small. It's just this. This is just how selling trend is. So right now, buyers, the market reached the trend line, so the trend line support, and buyers are trying to get off this trend line support so that they can break beyond this trend line resistance or this small selling trend. That's why here you can see there were a lot of rejection on this candle because of this trend line resistance of the selling trend. So buyers are trying to break out of this trend line trend line resistance of the selling trend, and that's what we have seen on H4. Buyers are likely to take over due to the indecisions which have been taking place. So currently buyers are trying to get off this area so that they can keep buying towards 50,400 while they keep pushing, looking for this resistance here. There's a big resistance at 3,434. Yeah. While for sellers, they are looking for 3,270. Yeah. So currently, buyers are trying to get to break out of this small trend of the sellers so that they can keep going forward. And as long as gold is still trading above 50,345, we are more bullish than selling. Then the moment we trade below, we are more bearish than bullish. Yes, so that's how the market stands. I hope everyone can clearly get this selling, can clearly see that we have a small kind of selling trend here, and the buying trend is trading within this wide what? Is trading within this wide range. Actually, it's called ascending channel. It's trading within a channel. Yes, Madam Eunice. To enter sell. Currently, if I'm to take a sell, I would opt to take a sell when this market closes below, when this market trade goes, when this market trades below 3,400, 3,345. When it sells a bit and then it retraces back to that resistance, then that's when I can sell. But before that, I'm not looking into sales. Currently, I can say that personally I would be more bullish than bearish. Yeah, but still, if it's buying right now, someone has to be trading with a tight stop loss because the current market is not too far from 3,400. Sorry, from 3,345. But when it gets tomorrow, and when it gets tomorrow, and the market is above 3,045, it will have broke this trend line resistance of this small selling trend. That means, are you getting it? Yeah. So buyers still still also have to prove to us by breaking out of this trend line. This is how it can be. Um, when tomorrow we find something like this, not bold, then retrace a bit, bold, and we find whereby it's very far from 50,000, 3,345. We shall be major looking for buying opportunities. Actually, this entire week, as long as it's trading above 3,345. But for us to take sales right now, um, I would have to wait for, if we happen to get a good selling confirmation here, and that kind of closes below 3,345, we can take a sell targeting this trend line support. And when we take sell, we'll be sure that sellers are looking for to keep on selling as long as the market keeps trading below 3,345. So, Madam Yun is currently more bullish than bearish. Yeah, as long as we are still above 3,345, I'm more bullish. Is it? Does it make sense right now to you? Okay, that's good. Yes, Desmond, do you agree to the analysis or anything you'd like to supplement on? Does it align with your analysis? Good evening, brother. Mm. Mm. So how have you been normally entering the market? Mm. Mm. Yeah. Mm. Mm. So you enter without confirmation. Yeah. Mm. Oh. So you actually that's called those are called breakout entries. Yeah? Breakout. So for you breakout entries, you as long as the sellers are trying to break support, that's when you enter. Oh, you don't wait for the candle to first close. Yeah? Oh, actually, you see, let me show you something. You see, gold, yeah? Um, Gold can trick people in a way that you may think that it's going to break somewhere, and it just does what? It just now, like here. I had a trade here, but I just kept on trade adjusting my stop loss up as it kept on going, going what? Going up, going bullish. When I got removed, I didn't do what? I didn't re-enter. Was the candle? I would have just to wait for this candle to first close. So this is how it is. Gold does this a lot. Gold does this a lot. Whereby actually now like this candle try to break. So someone would buy here, I think that's going to break, but you see how the rejection closed. Same thing the next candle, same thing the following candle. If you want to avoid yourself from stress trading gold, don't or only take buys from support with price action confirmation, or take buys after a resistance breakout. When it's a full-bodied candle which has broke resistance, then we can take the buys. But when you find that the candle didn't close and it had this kind of rejection, don't enter. Those are called false breakouts. So for for what? For bullish. Now, like for example, here, this was a support zone. We had a support zone here, and this candle So this candle closed with this kind of breakout. This was a good entry because remember, how big a candle is signifies how strong that side is. How big a candle is signifies how strong that side is. So this was a good what? A good selling entry because the candle closed with a big candle, just a tiny wick down. So this was a good entry for the buyers, for the sellers. So for bullish entries, don't take bullish. For breakout entries, don't take breakout entries before that candle closing. Wait for that candle first close, then you can do what? Then you can then you can enter. Actually, you can Desmond. You can take breakouts of this of the algorithm. Eh? Are you seeing my chart? Hello. Yeah, are you seeing this breakout on this support? This was a support zone. Market this kind of broke it. So someone would have sold here. So what you can do, take breakout entries with the algorithm. For example, here, the candle closed below this support. It sold more. Currently, you can see that actually now this algorithm clearly shows it on H1 that Reina Gold is trying to range. Reina Gold is trying to range here with this resistance and this support. You can see that this candle tried to close below the support, but it had a big rejection. A big rejection. So this wasn't a good selling entry. Good a good breakout entry is that entry whereby it's just a tiny wick. And when a candle is just very big, then it communicates that that side is what? That side is strong. So now you can see another example actually is here. Um, Buyers try to break this support, this resistance, but they brought back down. The next candle still came with a strong rejection. Then it was the next candle which broke this resistance uh, actually with a pin bar, with a pin bar. So, because this communicates that the market sold, then later it bought strongly, and it closed with more sellers. So this would be also still an entry for the buy. So just always wait for a candle closure. Don't just buy. Don't just sell as long as you are seeing that the candle is just buying, because gold does a lot of the does a lot of can gold creates a lot of candles with wicks, big wicks. That's how people get trapped whereby they think that it's going to break, and then at the end of the day it doesn't break. That's why these kind of candles are very many with long wicks. So just always wait for the candle to close before taking a breakout entry. Is it clear? Okay, that's good. Yes, yes, Madam Eunice. When it comes to entries, you don't take entries less than on a time frame less than H1. But personally, I take entries measured on M30. M30 H1. Those are my time frames. M30 H1. Then sometimes or few times okay, like just sometimes on H4. Yeah, but You can take entry on any time frame, not less than M30. Though if you haven't, though I would recommend that someone would at least first get would at least first spend some time taking entries on H1. Then you say when you master. I've been several times trying to show you how you can coordinate M30 confirmations, filter out and enter on H1. So when you get you when you get more when you get more when you master like how you can confirm entries on M30, then you can target entries on M30. But before, as long as you're following the trend. But if you haven't mastered that, then make sure that you enter entries on a time frame not less than H1. The other thing is that actually when it comes to gold, make sure that you follow the trend. When you look into this chart, you can see that we have had some kind of buyers, but sellers had more advantage than the buyers. Sellers had more advantage than the buyers because of this short selling trend. So always make sure that you follow the trend. If you are having a challenge confirming the trend, use moving average 21. Use moving average 21 and moving average 8 because they confirm you the trend. And by the way, the other thing I can tell is that unless you don't have a laptop, but if you have a laptop, don't take trades when you have not don't okay, like if you have a laptop, don't take trades when you haven't fully analyzed on the laptop. You can analyze on the laptop, take a screenshot, and then be following up for your zones, be following up for your support and resistances. But the worst thing you shouldn't do is if you have a laptop and you have been analyzing more with the laptop, don't try to analyze on don't try to be like you didn't analyze on your laptop. Right now you are trying to analyze on the phone. Don't do it. The phone will give you false entries. Yeah, the phone like the phone when someone has been using it for analysis more times, then that's when it can do what? That's when it can give that's when someone can be able to filter out good support and resistance zones. But if you are someone whereby for you have been more used to trading with a laptop, avoid entering the market on a day whereby you have only analyzed on a phone. I have worked on it. Um, I do have my in my trading room. I do have big charts, big screens where I analyze from. Actually, even is not my laptop is big enough and great to good. Even just markets blessed me with another good laptop. So when I try to trade without using the the laptop, or when I okay, like or when I've spent like 2 days not in the charts, because like when you are looking on the charts, you can be when you've been looking on the charts like for the past few days, you can be more aware of certain support and resistance zones. But if you haven't, if I spend some days, sometimes some days like not on the chart, when I try to just analyze on the on the phone for support and resistances, I end up not getting good entries. So the best way would be analyze, then you can take a screenshot of your support and resistance zones, be following up with your phone, then that's how you can trade with it. But don't just nakedly analyze or the phone. But for people whereby at least for them, actually, actually even me, I started trading whereby I was only analyzing with the phone. I never had a laptop before. I bought a laptop later with time, and from the money which I had made from the markets. Yes, so but there are those whereby for you still only have a phone and you can identify your zones. That's well and good. But at least everyone try to make sure that at least you have a laptop. Yeah, try to make sure that at least you have a laptop. If you don't have one and you'd like to get one, yeah, you can reach out to me. I have a shop dealing in gadgets, laptops, phones, accessories, covers, all that. It's in town, and I can refer you there, and then and then you select a laptop worth your what? Worth your price, worth your, worth the amount you can afford. So always make sure. Okay, if you cannot define the trend, you can use the moving average 21 majorly, because as long as candles are trading above moving average 21, it acts as a trend line support. Right now, wow, this moving average also agrees with our analysis. Right now, candles are trying to trade above candles are trying to trade above the moving average 21, as you can see here, meaning that momentum in the market is shifting from the sellers going towards the buying side. And when and the other thing is that um, when the moving average 8 crosses the moving average 21, yeah, you can give them your color, but for me, red is my moving average 21, then this black is my moving average 8. When moving average 8 crosses moving average 21, it means that buyers are stronger than, okay, when moving average 8 crosses moving average 21 from below, it means that buyers are stronger than the sellers. Then at that moment, you just have to be focusing, looking for buying opportunities, because it's confirming that the trend is in the buying direction. Then when moving average 8, like here, crosses moving average 21, going below, it means that sellers are strong. Now, like for example here, this was a good selling entry. Still, the moving average, they had also closed, and they were supporting sellers. And the other thing is that this moving average 21, it acts as a trend line resistance. When the market, if it's a selling trend, after the market selling, then when it retraces back to it, just like this candle, wait for a selling confirmation. When you get a selling confirmation within this moving average 21, just like how this indecision can close, that's a good confirmation for a selling opportunity. So it acts as a trend line resistance. The other thing is that always make sure that you always make sure that actually with the gold, it's better like for someone to have at least capital capital not less than 200 at least, so that, but even if your capital is big, make sure that you don't trade just big lot sizes. Enter a tiny lot size which can give your order a breathing space. When you enter here, at least stop loss can be around here, and make sure that you apply your stop loss according to your trading plan, and don't risk beyond 2%, If you're someone whereby for you want to be risking small, then stick to 1% per entry. 1% per entry, and then don't risk beyond don't risk beyond 6%. Okay, like your maximum drawdown shouldn't be going beyond 6% in a day. Yeah. So if you can control that, at least you are having um, a big room for growth and mastering. Yeah. So make sure that you keep applying those things. I believe they will be helping you. Yeah, and still, even in our weekly analysis, we shall be covering more and more things. Yeah, any question that which you get in during a trading week, at least you can ask it during. You can ask it in the weekly analysis. In the weekly analysis, yeah. Then check on the YouTube channel. There is a strategy. There's a strategy even which I have ever shared about how simple you can trade gold by only looking on two candles confirmation following the trend. If it's a selling trend, the moment you get two selling candles closing, you take a sell. And I'll be adding more strategies there. And the other thing is that don't make your analysis so difficult, like because you can find like someone is trading with a moving average, and then the moving average adds market adds a RSI, adds RSI, relative strength index, and like you're having a lot of things on on your chart. That is not good. Yeah, like charts which are signaling overbought, oversold. Yeah, as long as you master the market structure, you can know where the market is heading next. Yeah, so when you find actually the other thing is that when you find that for you, chart patterns, identifying a head and shoulder is difficult for you, then stick to market structure. Market structure and price action. When you find that you cannot, when you find that using a Fibonacci indicator makes it complicated to you, leave it. Focus on to something where something which seems simple for you to follow. You can focus on market structure, following the trend, and price action. And you keep sticking to that. You keep sticking to that. With the risk management, you will get there. You see, the forex trading knowledge is so big whereby you cannot cover and complete each and everything. But the knowledge you have, if you know market structure, you know price action, you know risk management, you know trading psychology, those are the key things to being a successful trader. You don't need to go and learn. You don't need to go and learn ICT concept, smart money concept, all that. No, every other trading, every other trading strategy is derived from market structure and price action. That book called the Candlestick Bible, I believe most of you have it. The Candlestick Bible, just like it's named Candlestick Bible, it's a Bible. Just like how any religion in Christianity follows the Bible. You find that there are other books which people have wrote about Christianity, but all their knowledge is coming from what the Bible says. So the Candlestick Bible is the mother of every strategy out there. That's why for me, I advise to always stick to market structure and price action. After you can be reading through that book. Don't go for things whereby they are not listed in that book, because that book itself, it's the Bible of the market. I don't be, and you see, but the other thing is that with the markets, like you cannot just fully master everything in just a few months. But the more you keep on doing things, you face challenges, you try to overcome them. You just now, like how my brother Desmond talked about the entering for the kind of closing. You are facing that, then you speak it out, and you get advice on how you can overcome it, and how you and when you keep on trying to figure out how you can overcome certain challenges you do face, that's how you can be able to get out of the, actually it's called s- not sleeping zone, trading in the is it in the boom, no, I'm forgetting the name. Like that's when you can get out of the traders who just trade. That's when you can start trading professionally. Yeah, so keep pushing, keep moving. You don't give up, learn from mistakes. When we get a session like this, to bring your question, don't fear, speak it out. And if you, even if you okay, like when you find that that you have an immediate question, then you can inbox me. I'll get back to you. Yeah. So, colleagues, that's all for today. Hope, how are you doing? Madam Hope, how is the going? Oh, you got lost. I don't know why. Oh, so you try to, okay, you reach out to me and then you tell me how you are moving. Yeah. Hmm. So, Madam Eunice, we know we're not going to have our daily analysis at 6 a.m. Yeah, we shall have it the following day because tomorrow is still basing on this analysis. Yeah, actually, we do have the. Let me first share this. So we do what? By the way, we also be having daily market analysis. So personally, these are my zones. These are my support and resistances, and the major resistance is at 3,448 to 3,451. So you can try to align these with your supports and resistances. Currently, this became a resistance. It's no longer a support. And by the way, you can always try to make sure that try to ma- try to make sure that you keep these charts, because you find that the market is always retracing within these zones. Sorry, my network was getting off. Yeah, I was telling you that try to make sure that you keep your zones, because you find that the market will always be moving within your zones. And when it approaches a certain resistance or support, when it breaks it, you'll be knowing what to do. So personally, these are my support and resistance zones for this week. And as long as the market is still trading within these areas. Yeah, so that's all for today. I wish you a blessed week. May the Almighty God be with you. Good night.